that you're going to need to reference for your future trades. So here it is. See if I can zoom in a bit. I don't know where to get that from. So, what is the overall goal of this trade you're planning to execute? Is it a short? Is it a long? Um, what's the average target you want to hit on this setup? What is the risk to reward ratio on this trade? So basically your stop loss percentage, how much you're going to lose on your stop versus how much you're going to gain on your target if it hits. What is your estimated timeline on this trade? So this is where you need to use the chart to your advantage and see what the moves in the past, like how long it took them to play out, what the time frame is on this current chart basically and setup. Um, so your timeline is important to know how long you're going to be holding basically. Um, how much of your account are you willing to risk on this trade? So there's things like allotted percentages that you can apply to your strategy. Basically, like me, for example, I never go in a trade with more than 15% of my account, and even 15 is pretty big. Um, just because I like to manage my wins and losses so that I don't have any inconsistencies where I could have one one good week and then one terrible week that destroys my account, you know. So I have one good week and one bad week. I want to end up at par, not that one could be bigger than the other. That's where you're gambling more. Um, so next next uh, point on the checklist is what is the implied volatility? So you got to look at the recent moves in like how much they moved in terms of percentage, um, what you can expect for this move, how much you think it's going to go up or down in the next month, let's say. Um, Obviously, there are some stocks that are way more volatile than others. Depends on market caps, share structures, many things, liquidity. Um, what are the reasons for your specific stop loss and target? So you gotta have a thesis and a plan to back up your uh, your trade basically. Um, you need to have a stop loss that's valid and that won't stop you out for no reason, um, and would help you in the case of a dump where if you don't have a stop loss, you're gonna lose a lot of money. Um, what's your target and why? Why do you think the stock's gonna go back up to that price? It's very important to know these things before you enter the trade. Um, does volume often support the stock? Liquidity. Um, so basically, like I said in my previous video, setups don't work out unless there's volume to play them out. Basically, you're betting on buyers to come in and take it up to that level, but if there's no volume, then uh, buyers basically can't come in, especially if it's a low liquidity stock, like where you would need buyers to take sizable positions, and they won't take the position if they can't sell it to someone else later at a higher price. There's literally no point. So liquidity is a big issue that also a reason why I don't like trading stocks with liquidity is because you can't have a proper stop loss. Um, so I'm gonna go over a few charts and to show you how to use risk to reward ratios and the chart to your advantage. Uh, so here's my BYND trade on the short side a few weeks ago. That was a big win for me. The puts I bought went up almost 1,000%. Well, they were over 1,000% for a few seconds. Um, so basically, this is when the market was at new highs. Oh, sorry, not new highs. It was retesting what was lost at the highs. Basically, when SPY was up here. So it's a very risky territory, and I felt very bearish on it. So I was looking for shorts. BYND was one of them because other stocks like Roku and Shopify were getting slaughtered, so I figured this one might have got slaughtered too. So basically, I was just watching this trend line. And you see how retested over here, right at what was lost, filled the gap, dumped with a bearish engulfing, and then was just consolidating for 2 days straight. So here, this is why I was interested. It was looking very weak. Already it had a 80-point drop, over 80-point drop, 90 points, sorry, 100 points, $100. Um, so it was like the momentum's clearly on the downside for now. So basically, I was interested because the market was fragile. This stock was very fragile, and I was looking for the first opportunity. In the morning, this was the morning. Uh, yeah, this was the morning I shorted. Just look at the 5 minute. Yeah, right here. So you already saw that it was a bearish engulfing on the daily, and then 2 days of consolidation. So here I was watching. Let me just remove this. I was watching in the morning. It was gapping down pre-market to this level here. So you expect to bounce right away, but at this point, I wasn't sure if I was going to enter. I really wanted a resistance retest in the morning. I called it 5 minutes before the open. I'm going to buy if it retests 154 resistance. So this was a big level, and so it gapped down at the open. I think SPY did also, and so basically everyone was in a bit of a panic. So I saw it retest resistance, so I entered my puts with a stop loss in mind. So this is the tool I've used and I talk about sometimes. It's over here, long position or short position. You can also look at the price ranges in terms of percentage and date ranges. So the plan was to enter here. This is your entry. You have your stop loss, which could either be, in my opinion, could either be up here. So basically, this is the most, looking at the 5 minute chart, high here, a bit lower than over here. It's always something to note when it's a lower high. Here again, lower high, dump, lower low. So it's already showing weakness. Plus, I know it's a bit choppy, but that's what you get when you look at shorter time frames, and it's a low liquidity stock. Well, low float. So here you could either put your stop loss over here, or over here, or at the most the more significant level lost, which is 156. It already got rejected 3 times here, so this is a very safe one as well. So let's say in the morning you would burst up, and retest resistance. It could be that it retests this, it could retest this, but it really shouldn't break this level if 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 the chart is telling the truth and it's bearish. So you enter here. Same thing if it was reversed to the bullish side, I would do the same thing. You buy the retest of the breakout as it's gapping up, let's say. So here, why did I target this level? Actually, I could have targeted right here, which is the most recent level gained. So you could put it here and target there, which would be, you're still looking at, let's say you're using this, which is what I was using. You're still looking at 4.8 risk to reward ratio. So you're risking $1.13 and you could gain $3.15. So sorry, it's 2.79 risk to reward ratio. So you could gain over $3 and you could lose a maximum of $1. That's not the first target. I can't remember for sure, but I know that I was flipping in and out of these puts. So basically, I sold on the first target, which was here, this level. So basically, this whole level here was the move that took it from 143 to 160, so a $17 move. So this is a significant day. Basically, the whole day is significant. You can pick the bottom here as your target, or you can pick the top here, which is the daily consolidation. It chilled here all day and then spiked up. So this is also support. And then if you zoom out larger, like this level, sometimes I just put 2 just because it could be like anywhere in that range, but they're like just because the ticks can't always be as precise as we want them to. So just to show you that you got to give it some leeway, I put the 2. So this is the trade, the original, the trade on the first day basically. There was 3 possible targets, one here which is still a 3-to-1 ratio, and a more significant target here, which is where I was looking at personally, the 147 level. As soon as, because you got to understand that as soon as one level breaks here, it's the 151, and it's lost. It's going to retest. Well, it's going to go for the next level first of all, then retest that level lost, and then possibly get rejected again. So that's your confirmation that it could go lower. It's not to the tick, obviously, but basically this is what you have to be watching for. You got to watch every level respecting. You plot out your levels before, and you readjust accordingly. So let's say this was my trade. I took profits around here somewhere, as like as soon as you see, this is the best time in the day to take profits. So it dumps aggressively, bounces a little bit, then retests exactly what was gained, like a higher low. This is where you take your profits, especially because you saw the bulls coming in, and now it's just giving them a better price to push it back up again. That's your time to take profits on the short. And so let's say you do that. You just exited for, let's say, it's a 5-to-1 risk to reward ratio. You made $6 and you're risking $1.13. So that's obviously a massive win for what you're risking. So let's say you exited there, and then you want to re-enter as it retested what was lost here, and you want to go for lower lows. You could let's say because it's hard to enter at the exact tick. So let's say you catch you don't catch a rejection, and then you catch the retest of the rejection. So this is again lower highs even here. Could have bought over here also, and so you place your your short position calculator, and you have to have a stop in mind. So let's say you're entering right here at 149.70. You can put your stop loss right above the level 140.30, because basically you know that if this level cracks, and there's basically no other level unless you look at the 152 here, there's no other level that will reject it if this isn't the level. So you put your stop loss right above it, and then you target your next significant level, which mine was already plotted here as 144, right? So that was the next level. Actually, sorry, there's this level 2 to 147. So even the first target, which this was the main levels I spoke about before, even the first target is a massive uh, a massive trade in terms of risk to reward. Your ratio is 6, and this is just the first target. Um, your second is down here, so you have a 6-to-1 risk to reward ratio. You're risking 50 cents, and you could win $3 basically. And then if you're going for the next target, you're looking at an 11 risk to reward ratio. So you got to use these tests of these levels in your advantage. Um, so where did this move? Like, this is pretty much the way I was trading intraday, because in options, in weekly expiry options, let's say your your put doesn't land in the money, it's gonna end the week worthless. It's gonna be at zero. So you got to get rid of it as it's going down. So I was basically taking profits every day and rebuying on the retests and rejections. So this is how those puts went up so fast. Um, Day after day of rejections or tests. That's all the market does, is tests. And let's see where it bounced. Bounced right here. I didn't have that level marked. Actually, no, I did. I had 132 marked. It was a bit off, but basically you see on the hourly chart that here, higher high, higher high, higher high. We reclaim this. This is I was taking profits early in the day, thankfully, because it became really bullish and even gapped up. I would have lost all my profits if I hadn't sold them. Um, but like when you see it reclaiming these levels, that's when you want to start like being cautious, betting on the downside. Um, Here is another perfect example on the bullish side. You can play the same stock like short, long, every day. You could go from puts to calls, or short to long every day in a matter of hours sometimes if it's that volatile. Um, so it all depends on the time frame you're looking at. Here again, you want to calculate a long position. This is a falling wedge. So let's say you're gonna enter right here. This is like whatever, consolidation breakdown, and here's like you see on this candle, these two candles is regained this 142 level. So regain it starts consolidating near the end of the day there. Also came close to filling the gap. So whatever. Anyway, see, this is the falling wedge. I even called it to exit all puts because I always bet on the reversal on a falling wedge. So your stop loss, if you're entering on these candles here, you're going to want to enter at 142. You enter here your stop loss below the most recent low, recent level gain. So 141. So you have an 80-cent stop loss, and your target, let's say you're going for the first target, is already um, 2.5 risk to reward ratio. Still pretty good. But in a falling wedge, you're going to want to target a little higher because these things are strong. So patterns also help come up with your thesis and time frame too. So say here, you're looking at the apex of the wedge. You know it's going to move in this next couple days. Actually, this is 2 days. You know it's gonna break out of this apex in a big way in the next 2 days because it's tightening up basically. So this is where your time frame comes into play. So this target would be 5 to 1 risk to reward. This one would be 8. So that's how you use the tools and stop losses too. Let's look at canopy. Then we'll talk a bit more. This is another one we killed this week. So last week, sorry, the week before last week, we were over here. We were breaking. I'll look at the bigger time frame first. Even though it's a mess. So we hit a low, we rallied all the way up, rejected what was lost, rejected hard, a lower low. Actually, no, sorry, we were here last week when I was starting to call it bearish because every time it bounced, it would get rejected, and the volume was really like pathetic. So we had to expect a move down. So I was watching it before every market open. Every night I plotted these charts. This 5-minute time frame. So here's the breakdown. First of all, as soon as it loses 31.50, that's when the panic kicks in. You could have shorted up here if you wanted to. This was a gap down and probably retested. If you look at the 1 minute, probably retested the level and then dumped. Could have easily bought puts there. On a 5% move like this, from 31.50 to $30, if you're playing the weekly puts, those things could go up like 300, like 200-300% in a matter of minutes as this is happening. So the shorter time frames are really good for options. So I didn't play this because I expected it to bounce on the first touch around 31 to start, but it didn't. So then I looked at the chart at night, which was, this is the way it was. And so you see here, like a nice accumulation here, pop, retest, and then it was chopping upwards again. I called a rising wedge. Because this was the pop, it ended up getting rejected, right? Basically the most recent top. So the level of this loss was 30.30, which was also the level that it gained. The exact low was 30.31. The first time it hit and rallied to $38. So that's a big level. And here it was a rising wedge into that level end of day. They tried to break it up, but I knew it was trappy. I put this arrow and I called for downside in the morning. So I waited here. It dumped to a new low, retested the exact highs, and this is where I bought the puts, which ended up doing, I made 270%. on the breakdown. So basically, you just buy the retest when the momentum is bearish and should go for the next level gain on the bigger time frames. And then here's this day, it would have it would have a double bottom here, a nice retest of this level gained again, a nice pop again, and then a falling wedge. So here I was expecting a move up in the morning. I thought maybe a gap up, retest, and move up because of the bullish pattern and more bullish accumulation than this day. It ended up gapping down because of well, not because of the news, probably because of the momentum and because of reaching that they wanted to take that significant level. And there was also news that they're acquiring a company. The acquirer is usually bearish short term when in the middle of an acquisition, in my opinion, for price action. So I was still in the puts over here, but planned to cover in the morning after I reviewed the chart, and I ended up catching the exact low. Luckily, honestly, luckily, because I didn't really expect the gap up to be that significant. But basically, when it dumped to that low, as you can see, it happened really quickly. Bounced back up, retested the low lost, and then pushed back up. So that's where you want to cover for sure. But how did I know it was time to cover? I just zoomed all the way out, and this was the original level that we bounced on. So this is the daily chart. The gap fill over here, and as you can see, it's so many pops and drops off this level. It's like very significant. So this was the reason for the first pop, which ran over 25% or something. Anyway, that lost. So now you look for the next one. Next one I see is this right here, which is where the run all started. And also argue it started over here, but this is where another huge level, 2750, and it ticked right past it and then just bursted up. So, and here is where I bought calls also. So let's say you're switching to calls now. You're buying an oversold dip buy. This is an easy spot. First of all, it's the third red day, so dump, push back up, retest. So this is your spot to enter. So let's go with the tool again, a long position. You want to enter here. Target is minimum this right here, because like it gapped down. It's this range is untested, and it was bullish the day before, so a lot of people are buying up here. It's definitely going to want to get retested. So here's the first target. Your risk to reward is 2.2, so it's still better than 50-50. You know, the gambling, buying anywhere without your chart as a reference is complete gambling. So already 2.2 here, but I had mentioned the night before that I was targeting the 29.80, which is very close to the round number $30, which was obviously a big resistance, and the biggest is still the 30 resistance, which is the first bottom put in. So that's the big one. So this, if you were targeting this level, which was a good retest level, honestly, your risk to reward was 5.9. So obviously another amazing setup. Just very quickly, I want to go over why I'm still bullish on Canopy, and I think it might be the bottom. First of all, because of the level that we're at, and second of all, because of this. Just look at this pattern. See, This is the bottom, a massive move up, consolidation, rising wedge, and then break up. Rising wedges are like, it's so rare that they break up. It's usually for something, it's usually abnormal. So I'm thinking something's up, just because this happened, honestly, and because it just keeps hugging the highs. Um, so like, I'm not betting on this personally right now. Like, it's not something I'm gonna bet on, but it's something I'm very interested in. So just look at this. After a massive uh, downtrend, ignore this. Excuse me. So you can see obviously the massive bullish divergence on these lows also, which reinforces my thesis. Um, I think if we're going to break higher here, it could really be the bottom. And here's where we would get our rejection if there is one. 35 bucks, or this level lost 37.20. So that's going to be the next big resistances. But why do I think it might be a very significant bottom? Again, look at this pattern. Just memorize it. Bottom. This is 2 days work, by the way. This is the third day. Now look at SPY. So this is SPY in December. Sorry, this thing's not loading. But so as it retraced from the highs, the new highs of like 290 or whatever, uh, aggressive downtrend. It was down like 20% in a short period. It's basically very oversold as Canopy was. It's gonna like, gotta look at this in the 5 minutes. Sorry. Uh, Sorry about that. Can't go back that far. But this is what I'm looking at. See the way it held this low like Canopy did? Broke up, consolidated all day. This is 1 day's work versus Canopy's. So it's a different time frame. Basically, this happened 2 times faster than Canopy did, but it's basically the same type of pattern. Rising wedge here. I'll draw it out for you if you don't see it. But so rising wedge, break up, which is obviously very abnormal. You should expect a pullback. Um, as you can see, it just retested some key levels gained, which would be, if I had to plot them out, would be these. And this one, because of this. So you're watching these levels, you see the pop, you see the reclaim here, you see the reclaim again of this level, then you're just watching for the significant levels lost. But this is why I'm just thinking this could be a long-term reversal pattern. We're going to find out tomorrow. Tomorrow or Tuesday on Canopy for sure if this is the bottom. So like I said, I'm not taking a trade here. This is not a tradable zone for me. But those are the things I'm going to be looking at for Canopy. Um, so just to review some things on risk management, always plan your trade ahead of time. Know what kind of trade it is, what time frame you're looking at, um, what's your stop loss. Always have that in mind. How long do you plan on holding? How much of your portfolio are you willing to risk? Like I said, I never allot more than 15% of my portfolio on these calls, but along with having 15% of my account in it, I also have stop losses on each position. So my max stop losses is usually never more than 5%, honestly. So let's say you have 15% of your account in this trade, and you're only risking 5%. You're really only risking, you're not even risking 1% of your account on this trade. And you're going to try to gain whatever your risk to reward ratio is. So you're going to try to gain 2% on your account on this trade, basically. If you're going for, let's say you have a 5% stop loss and a 15% target, your overall account's going to change either 2% profit or 0.07% in loss. So what else? Again, we got to be reacting to these levels, always watching what was gained and what's not. Um, it's important to know where you are on the chart. So, Trueleaf is one example of a long-term trader's vision. So, this is a trade, in my opinion, that you don't want to. You could just trade the pops and trade short term like I have, but it's an okay stock to go long on. Like, let's say down here. So you see, this is the IPO, massive move up, long downtrend, come down and retest, long uptrend again. Now a very long drawn out downtrend again, and all the way at the bottom we have some massive volume coming in. So basically, a massive change of hands. There's new people coming into the stock. It's really the time to look for a massive trend reversal, and it's also a slow mover. So this is not something you want to day trade because it's choppy. Uh, it only moves when it's ready to move. So this is something, let's say you're looking at over here, or even right here on the retest. This is something you want to widen your stop. So let's say these are my levels. I would put my stop loss below this 990 level. Let's say you're buying here. You're going for a long position. You can use this in long, short-term positions, any time frame. So use this to your advantage. Stop loss would be there. If you're going for a short-term swing, you just go for the most recent level lost. So the most recent level lost is where? You can argue it's here, but let's say the top of the leg. So let's look at all the tops and bottoms of the leg. So this is the bottom. This is the bottom of the leg right here. This is why I retested this whole trend. So here's the top. Here's the bottom again. Here's where if you're swinging, you're just gonna sell on the retest of this top. But anyway, if you're longing, you have different targets such as this one up here that was lost. So again, let's just talk the bigger time frames. This was lost. This was lost. This was lost. This was lost. This was lost, and this was lost. So these are the targets that you're going to be looking at if this thing is going to reverse. So your first target from this entry would be this level right here or up here. So already you're looking at 3-to-1 or almost 3-to-1 risk to reward ratio. This is with a pretty wide stop. You have actually 6% stop. You're actually pretty solid there. So like I said, we're gonna circle all the levels lost. So depending on your time frame and yeah, basically your time frame on this one, how long are you willing to hold? You can retest any one of these levels, but nothing goes up straight. Everything takes time, and it's basically like if this goes up in 3 days, very extended to your level, your most recent level loss. Usually, if it were me, I would take profits right away because I'm a more short-term trader, and I'll just rebuy on one of these retests. If it shows a reversal on the shorter time frames, that it's going to reverse back upwards, I could just rebuy the retest and gain more profit. But let's say you're a long-term investor, like we were talking about before. You enter on this level, this retest of the level gained. You have your stop loss under. You can go for this target, 3-1. You can go for this target, 6-1. You can go for this target, which is 7-1. No, sorry, 11-1. Or this target, 15-1. So again, long-term trading, you gotta have so much patience to get in and wait for this. Like this is like your long-term signal in my opinion. But if we fail to gain this level, this is why it's always good to take profits too on the first test. If we fail to gain it, then it's gonna go lower. Like we say, if basically as this level, oops, this is the most recent level gained, and this is the level lost. So nothing's gonna trade in the same range forever. Either it's gonna lose what it gained, what it gained, or lose what it lost. So you have your timeline. You gotta set up your timeline ahead of time. What are you in for? Which target are you in for? At what point would you be happy with your profits? Are you in for a shorter term trade or a longer term trade? So once again, these are things you gotta ask yourself before you enter the trade, and you know, let's say it's your stop loss is hitting, you gotta accept that you might be wrong, and you just plot out your next levels. You know, you try to enter at this 950 next if it would fail. You stop out at $10, you could even try again at 950 with a stop loss on new lows, 930. Anyway, it's just remember to react to the levels that we give you. For example, like tilt, like a dirt bike stock like this, you don't want to be holding into a downtrend if it's going to continue. When it loses these levels, you need to exit, because if you don't, as you can see, 130 to 28 cents. Even here, this tested many times, dumps and retested. This is your cue to sell. 72 bucks, you just got slaughtered if you held. And like again, we called the sell over here because of this downtrend and the gap open. It was too extended. You gotta take your profits right away. Look to rebuy around 30 bucks, 30 cents, sorry. But all these stocks, man, you gotta be careful. So implied volatility, another thing, is basically how much the stock is set up to move. So say you're looking at it's a good stock to reference. So here's a stock that just went from over $4 to $1.50. Because this move is so huge in terms of percentage, you need to expect a massive move that comes following this. It could continue going down, or it's going to reverse in a big way. So this is where you calculate your implied volatility. So basically, you see that it's down 70% in a week, literally. This is the daily chart, and you gotta expect a massive continuation of this move. Uh, so when you're trying to decide how much to allot to your trade, you're not gonna, because it can move down so fast and trigger your stop loss. You don't want to risk too much, especially because it's a stock with a big implied volatility. Um, you're gonna have to have a wider stop. Um, so here's where I could say you say let's say your average allotment per stock is 10%. For this one, you could put like 5%, and if you're gonna win a thousand like a if your target is, let's say, 50 to 100% on this trade, you don't need to go in for 10%. You could go in for even 3%, 5%. If you're making 50 to 100% on the trade, you're still gonna gain your portfolio like your 2% average, right? So um, this is one way to look at implied volatility. How much, like, what are the recent moves? When it dumps, how much does it move back up? When it pumps, how much does it move back down? Um, these are things like, if you compare this one to Truly, it has massive swings too, but it's they take longer to happen, basically. So you can look at a stock like this. You can look at a stock like Gain, which is like this stock. Let's say you're playing with 100K. Your account is 100K in size. These moves are massive. This went from 10 cents to $1, so that's like 1,000%. And even just here, 30 cents to $1 or whatever, that's over 300% in a week. These stocks, you don't need to risk so much money in them. Like, if you're gonna risk that much, then you gotta be ready to take a massive loss on your stop loss if it happens. So, like, with moves like this, you really don't have to risk much. Let's say you have $100,000. You want to make 2,000 today, or not today, on the trade. You want to make 2,000. All you gotta do is allot like 2 or 3,000, or like max 4 or 5,000, because your minimum move here, say you're looking at it right now, it's either going to retest this high loss, or retest these levels gained. So let's say you're playing with 5K. If it goes from 60 cents to 87, you're making 45%. You're playing with 5K. You just made 7,200. And if let's say this is your stop loss, 50 cents. You're playing it went from 60 to 50. You just lost about 18%. You're playing with 5,000. You just lost $1,000. So you're still like, it's still a lot of money, even though you have 100,000. Like, this type of volatility could either kill you, or it could be a huge gain for the trade, basically. So you gotta know that every stock has different implied volatility. They move in different ways, and different strengths, and different percentages. Um, like obviously, a stock like Apple, which with a lot more liquidity, is going to move very slowly compared to all of these stocks. So this is one that you could go like 25% of your portfolio in, and you could wait for a 5% move or something like that. So it's not the same as the riskier stocks to move more. So I know I jumped all over the place today. Not my best video compared to my last one, in my opinion, but just trying to highlight the risk management assessment in trading, and just to warn you guys to always have a plan and be careful out there, because if you're not willing to risk what you're putting in that trade, then you shouldn't be taking the trade. And if you don't have a stop loss, you're gambling, in my opinion. Um, like I said, there are situations where you shouldn't have a stop loss, where a stop loss trigger is likely, and you shouldn't have a stop loss just because they're gonna take it and then reverse it. Sometimes they use that to their advantage. But here's TRST. One last example. Um, I was trying to trade it down here as it popped off here, and retested. I bought over here. Um, so here my stop loss. I was watching the hourly, and I just realized that this was the level to hold, 750. And here I was in at 765, I think, and I realized that it kept ticking to 750, but like basically I could have had my stop below at 749, or I could have set my stop on a closing day below 750. Because it hasn't closed one day below 750, you could even use a closing of a candle as your stop loss, because that's a sign that the next day is gonna continue in that direction. So you could use the closings of a day. You could use trailing stop losses, which I rarely use, but basically, we look at labs again on how to raise a stop loss when you're in a trade. So let's say you're in at this level, pops, reclaims this level. You right away, as soon as it reclaims, it starts retesting the next level. You raise it below this one, 30, 30, 30, 30, 30 basically. Use round numbers. You're in at 311, so you're locking in 6% no matter what, right? It continues pushing up, gains this level. Then you could easily raise your stop to here, 30.50, put it at 30.49 for the round number, and just keep letting it ride. Right away, you're locking in 12% no matter what if your stop loss is raised here. Then you see it gain higher, gains up here.
Okay, media will play louder.
Fucking Siri. So you see it gains up here. You could raise your stop loss here again, right under the line, right? Here again, test, gains higher. You could set your stop loss. These lines are arguable. You just keep raising your stops on the significant levels, so you just keep locking in your profits. At what point would you get stopped out? Say here, your most recent level is up here, right? Your stop loss is here. Here it breaks up, it breaks this level, and starts going for this level. So you could either raise it below 439. This would be like the perfect stop loss. As soon as it breaks, you set it right below, or you could use the one before, which is 424. You stop out because it got rejected and it retested your stop loss, and retested under what was recently gained. That's your cue to stop out. And if you're in at 311, that's 35% gain, if not more, 30-40% gain. And that's basically how you execute raising your stop losses. By the way, very bearish on the rejection, on the retest. We're going to see how this reacts. But I'm thinking it's going to retest 350 again. I think 350 might be the next level. What was gained up here on the daily, the bigger time frame. Yeah, looks like it in my opinion. But yeah, in terms of options, there's a lot of people that are starting to get into it now that we're calling a lot of options calls. Um, but I warned some of you already. Options is very risky. It's like same as futures. Futures, it's leveraged trading. Um, you can blow up your account by uh, owing the service money because you're leveraging money, right? So if it goes below your stop loss and you haven't closed out your trade, you're gonna owe them money. Um, Options is different. Uh, you're basically whichever contract you're buying, a call or a put, it could go to zero by your expiry. If it doesn't expire in the money, it's gonna go to zero for sure. So you always have to react on a much smaller time frame. You got to react to every. Say you're in calls, you need to sell on every rip, every top of every rip. So you just got to keep raising your stop losses. Um, if not, you could just dip all the way back down and expire worthless at zero. So this is a perfect example of risk management would be in options. And I imagine to a few people who had a few winning trades. I'm not going to say their names, but um, one guy was having a lot of, it was his first week in options, which is why I had to warn him, but he had a few winning trades on a good day, and I warned him and told him that you really got to be careful winning these trades because you like the emotional side is going to tell you to start putting more and more of your profits in, so you're going to go bigger in size, and you're going to expect the same reward. I told him not every trade is the same, and you gotta stick with that minimal size management. So that you're not gonna say you're making money off the like you're putting $200 per trade and that's how you're successful. You're not gonna start putting 500 or that's how you're gonna lose it all again. Especially, and I told him to relax. Also, like don't take too many trades. Take your time. Um, Wait for the trade to come to you. Things like greed and seeing these gains is what's gonna throw you off, especially in volatile markets like options and futures. So there's a mental aspect to these things too. You gotta watch yourself. Don't get caught up in the gains or losses. That's why I like to keep everything planned ahead of time and calculated. I calculate my risk. I know when I'm wrong. Um, or I know when the probability of me being wrong is there. So I use that to my advantage. These things are important in trading. If you want to be consistent, like if you want to be consistently profitable, you gotta apply these risk management techniques, or else you can have, like I said in the beginning, you can have one good week, 2 good weeks, and one terrible week where you didn't manage anything and the whole market dumped on you, and you're back at square one, or even back at losses. So it's better to take everything calculated risks. Um, I mean, we're not at the casino here. The casino is 50-50. You're just taking your chances. We'll see what happens, right? We can calculate our risk, and we use a chart to do that. So uh, you guys got to start planning your trades, knowing when you're wrong, when you're willing to stop out, and also being happy with profits. You need to react to the sell targets. When the money's in front of you, you got to take it, or else someone's gonna do it first. So say your stock pops and hits your level, Don't say, okay, wait, let me see if it could gain to the next level. First, wait for the retest, and then see if it could gain the next level. Never think it's just gonna go straight up, like through the levels, and So, I think I'm gonna end it here today. I know the video wasn't the best, but I hope I helped a lot of you on how to manage your trades. Know that everyone has a different strategy, different time in the day. So keep all that in mind. If you have any questions, feel free to reach out. Um, if you're still iffy on trading, seriously, just sit back, ask more questions, take the slower trades, the ones that don't happen so quickly. Um, just wait till everything clicks. Don't rush into anything. Don't go into any trade without a plan. Um, it's pretty much it for today. Uh, like I said, if you have any questions, just contact me. Happy to help. I wanna see you guys succeed. Um, it's tough taking losses and not understanding why. So I'm just trying to reinforce the techniques on how to manage these losses. Um, every new trader takes a lot of losses. Even experienced traders take losses, but you really got to manage them. And yeah, so enjoy the rest of your days. Um, enjoy your Sunday. Uh, we should have an exciting week in terms of the SPY and pot stocks. Certainly can be volatile, so expect volatility. Respect your stops. Have a plan, and yeah, peace out.